Today I want to teach you how to run a top-down analysis. You must have been hearing top-down analysis. Many of us don't even know what is a top-down analysis. Some of us just open your MetaTrader and then you see a particular trend and you join. The market might be selling, you open a sell. The market might be buying, you open a buy. So today I want to go in deeply on what I understand by top-down analysis. Okay, we have several time frames. We have the monthly time frame, we have the weekly, we have the daily, we have the H4, that's 4 hours time frame, we have the H1, that's the 1 hour time frame, we have the 30 minutes, we have the 15 minutes, we have the 5 minutes, we have the 1 minute time frame. Many of us are really struggling on actually understanding the difference between all this time frame. Let me give you an instance. This is a H4. This is volatility 75 index for those that trade derivative. If you're seeing a sell movement, you're seeing a bearish movement in the 4 hours time frame, a bearish movement in the 4 hours time frame. On the 4 hours time frame, this same movement is also available even on the 15 minutes time frame. It's just that the 4 hours time frame is a macro view of what is happening in general in 4 hours. Each candle forms 4 hours. Each candle forms in 4 hours, like a general view of what is actually happening in the market. Meanwhile, in 15 minutes, the market is actually selling, but in 15 minutes is a macro view, a micro view of what is happening in the market. And if you zoom down on the 15 minutes, you can see that it has made so many highs and lows. You can see this is lower low, lower high, lower low, lower high, lower low, lower high, lower low. It has made so many highs and lows. The same candle on the 4 hours time frame that is just red, it's just bullish, bearish. It's the same candle on the 15 minutes is giving you so many highs and lows. That is because the smaller time frame is a micro view of the market. A micro view of the market. Many times I tell my students that it's usually good to look for a very good sniper entry from the lower time frame, and then you monitor it on the higher time frame, because the smaller time frame contains too many false moves, too many manipulations are existing in the smaller time frame, and you cannot actually take false movement. You can't rely on false movements of the smaller time frame, but you can rely on every movement on the higher time frame, like H4, especially the daily time frame. The daily time frame gives you, if you see any candle signal on the daily time frame, candle retracement signal on the daily time frame, it is a valid retracement signal. But if you see such kind of signal on 15 minutes, it's just a short something, just a short signal, just a false movement. It's not a real movement. If you see such kind of thing on the 1 minute, the 1 minute is even the worst. It has so many false movements. Also, I would like to say that the candle, the type of candle, the type of chart, the type of time frame you will use depend mostly on the type of trader that you are. You get? So, and also the type of account size that you have and your style of trading. If you're a type of trader that you have you don't have time to wait for trade for too long, you don't have time to hold trade for too long, the smaller time frames like 15 minutes, 1 minute is for you. You're a scalper. You exist a trade in less than 5 minutes, less than 5 minutes, 10 minutes. You are a scalper. The time frame that is good for you is the 1 minute and the 15 minutes. You can also use the 1 hour to run your analysis. You enter from the 1 minute and actually monitor it on the 15 minutes. So, but if you are the type of person that and also too, if you have a smaller fund, I want to advise you to go to the bigger time frame, because a retracement on the bigger time frame can wipe your entire funds. A retracement on the bigger time frame can wipe your entire funds. So the type of account size, the amount of funds you have on your account, your style of trading really determines the time frame you will be using for your trade. If you are also a type of person that you wait for a confirmation trends to happen, if a confirmation entry, you will need the higher time frame for your confirmations. Okay, so let's dive straight into the lecture. I want to show you how to run a top-down analysis, what you need to have in mind, how a top-down analysis is being done. Top-down analysis is very simple. The word top-down means you're starting from up. You're starting from the highest one. You slowly come down to the lowest one, meaning that if you're running analysis, you start from the highest time frame, which is the monthly time frame. You can see it, the monthly time frame. You start from the highest time frame, which is the monthly time frame, and slowly come down to the 1 minute time frame. You can see it slowly come down to the 1 minute time frame. That is the word top-down analysis, because we start analyzing the charts from the highest time frame. You get a bigger picture, a bigger view of what is going on in the market. We have that bigger picture in our mind, you get, before we then finally enter the trade in a smaller time frame. Just for instance, you already know that this GBUSD on a bigger time frame, on a longer run, GBUSD is a bullish trend. The market is soaring higher, for instance, you get. But you can always join the trend, and if you go lower down to 15 minutes, you might see that the market is selling. It doesn't mean that the entire trend is sell. The market is just selling for that moment. You can just draw your, get your structure. If you see small liquidity there, maybe like the liquidity like the double bottom stuffs like that, or double tops, you can take liquidity from there and catch up with the trend. That's if you're a scalper. Make up to, like, let's say 50 pips, 50 to 100 pips. You leave the market. Okay, but if you are a type of person that you don't like trading anyhow, you trade like the institutions, like the banks, or you get like this. You trade like the smart money traders. Then you don't need the smaller time frame. What you need is the bigger time frame. Get your confirmation from the bigger time frame, then you enter from the smaller time frame, and then you hold until you hit, you get your TP. So we're going to do analysis now from the monthly time frame. I can really tell you that the market has really done a lot of move, a lot of sell move, and currently right now the market is currently on oversold on the monthly time frame. The market has oversold. The market really pulled down, has been selling. Volatility 75 has been selling for so many months. So now we have already gotten the clear picture of what is going on the monthly time frame. We slowly come down to the weekly time frame to understand properly what is going on. From the weekly time frame, you can also see that it is still on the oversold. You can see oversold region. The market has really sell, and also too we can also tell from the weekly time frame that the market is consolidating. There are three structures in the market. There are three things that happen in the market before you even run analysis every day. You need to check these three things. First, you check what is going on in the market as a market structure. What's going on in the market? Is it consolidating? Is it trending, or is it actually going sideways? You can call consolidation sideways. So if the market is not going up or going down, which is a normal trend, if the market is going sideways, the market is consolidating. So if the market is not going up or down, the market is consolidating. So you have to always be aware of what is going on in the market before you even place a trade. If the market is consolidating, it's neither going up or neither going down, it is ready to take all your funds. Because when you're buying, the market hits a certain level and starts selling. If you're selling, the market hits a certain level and start buying. So the market is not making any serious move. It is always very risky to enter such kind of trade. But although a consolidation on a higher time frame is tradable, you can trade a consolidation on a higher time frame. It is better to trade a consolidation on a higher time frame than to trade a consolidation on a lower time frame. For instance, if you zoom out, you can comfortably enter this trade. This is a weekly time frame. Comfortably enter from year to year. From year to year is a very huge trend on the smaller time frame. If you check it, it's very huge trend. Is able to triple your account size. So meanwhile, it is consolidating on the weekly time frame. So having established that market has three structures: consolidation, moving sideways, and trending market. Trending market is when the market is going up or down. You get? So like for instance, in this area, the market was trending. But in this area, the market was ranging. You can call it ranging or you can call it consolidation. Okay, now let's move from the weekly time frame slowly to the daily time frame. So daily time frame, now you see everything now is the printout is more broad and everything is making sense. You can now read candles, you can understand what's going on, the movement. So from the daily time frame, we can now start looking for levels, since everything has started becoming so clear to us, unlike the weekly time frame. We can now start looking for levels. So we can pick up, since I'm using my mobile phone for these lectures, I'm using this mobile phone so that to prove to you that you can run analysis not just on your computer, you can also run analysis on your phone as well. So the excuse of not having a laptop shouldn't be your excuse. You can do analysis on your phone and still make good money. This is my phone I'm using for analysis, and I make, you can see this is 61k. This is my profit, my history. You get, so by God's grace, I'm a profitable trader. So let's go back to the lecture. So from the daily time frame, everything is making sense to us. So we now start marking levels to understand what is currently happening. Remember, on the monthly and on the weekly, the market is telling us that the market has bought oversold. You get, let's go back there. It has oversold. That's oversold. Remember, don't forget, that's oversold, and is ranging. So we are not trying to, remember I said it's tradable. You can trade ranging market if it's ranging on the higher time frame. You can trade it on the smaller time frame. So that's what we want to do right now. So we'll go over to the D1 and mark out the levels. How do we do that? You zoom down. Always zoom down your chart, whether you're using the computer or you're using your phone. Always zoom down to have a clearer picture of what is going on. So from there, I pick up my brush. I take note of the levels. This is the level the market reached before. It respected that same level. You can see you couldn't respect that same level over here. I can pick out my horizontal line to mark that levels. You can see this level also can be called a liquidity level. I'm going to explain as we move forward what liquidity is all about. Now I pick up my horizontal line again to mark another level again. It's another level where the market made from this side. From this side, you can see market bought from here, got to this point, respected that level, got to this point again, respected that level. From here, it was able to break from that level, but it was not able to break through this level. So it respected that second level again, pushed up again from here, came down again. It could not even break further, pushed up again. So it's a very strong level. You can call this level a very strong level. You can call it a very, very strong level. So this is to tell you that the trend right now is an uptrend. For this daily time frame is an uptrend. It's an uptrend because if the market has actually came down, break through this level, then that's you can call that change of character. You get, so the market has make a different low, so we'll start looking at for a sell trend. But right now the market couldn't break through that level. The market just broke a little bit and started pushing up again. So we have established that fact. The next point we are trying to understand now is currently what's going on the market. The next thing I will look at for now is what is going on the 4 hours time frame. So from the 4 hours time frame, you can see the market is selling, is currently selling. So from this point now, after establishing that the market is a buy trend, what else? What next should we now do? Should we place a trade? No, we need to understand properly what is going on the market. Okay, back to the daily time frame. If you zoom out very well, you will start seeing structures in the market. Mind you, I'm a price action trader. I see structures. I read candles. I read Forex without using some technical tools. So I'm price action traders. or you can call me, you can call it, if you don't call it price action, you can call it naked forex. People that read charts without any indicator. So if I should zoom out now, I'm seeing some structure which are very, very important, and especially seeing that kind of structure on the highest time frame, which is the daily time frame. It's very, 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 very powerful. What are the structure I'm seeing? I'm seeing an M here. I'm seeing an M here. There's an M here, and you can see it respected this. If you want to learn about structure, I have so many videos on my YouTube that talks about structures. So you can see an M here, and immediately from that M, it started pushing down. You can see, started pushing down, came here, and went back for a consolidation. Now, from that consolidation, now I can guarantee you that the market will, pull down further from this daily time frame. From what I've understand, the market is going to still pull down further. But let's try and get every M has what is called the neck line, the head, the left shoulder, the right shoulder, and the neckline. So let's mark that out. So this is the head, this head, this is the neck, this is the neck. I mean, this is a left shoulder, this is the right shoulder, and this is the neck. This is the neck actually. This is the neck. So remember, we only, if you know how to trade head and shoulder pattern very well, we don't enter a trade. We only enter a trade after it has broken through this neck. It becomes a valid sell entry. So it broke through the neck and did a retest. Probably is going down again, and currently right now you can see is going down again, and I believe it has also past the neck. It's also gone past the neck. Sorry, let me draw that line very well. That's also gone past the neck. So I think we can consider this as a very good sell. Can consider this as a very good sell. Remember, initially I told you it's a buy trend. When I saw the levels, the different levels, I stated that it's a buy trend. When you're doing an analysis, you can be communicating to yourself because you are reading the chart. So you can be communicating with yourself. You can be telling yourself, oh, this happens, this happened, this happened. Okay, I should be expecting this. You can talk to yourself if probably you can teach yourself while doing analysis. It really, really helps. So now, if now, from what I said earlier, it's a sell trend. It's actually contradicting with what I said before, that is a buy trend. But it can only be a sell trend. It can only be a sell trend if this market comes down again and break below this. See this immediate low. This immediate low. I'm not drawing it well. This immediate low that is here. If this candle actually comes and break through this, then we know that the market has changed direction to a sell. Probably maybe it breaks out from that level and then push up again. And even if it push up, it shouldn't break above this immediate low. If it breaks above this immediate low, that means you have to move your mind from sell and start looking for a buy. So at least if it breaks through this immediate low, give us another retest. You can always come back here if you want. but it shouldn't break above this high. Then if it comes back here and then starts selling again, this time around breaks below here, then it break below this liquidity. This is a liquidity area. This is where people stop loss. People buy signal is lying. Pending orders are lying on this liquidity. There are a lot of things that liquidity are areas where we have the people, buyers available. It can be buyers or sellers. Liquidity can happen for uptrend. Liquidity can happen for downtrend. You get, so this one now is a liquidity for uptrend. Buyers are piling up in this place. Buyers are piling up in this place. There are people that they don't even enter trade like that. They just pile up their buy pending order just to wait once market hit this place and cannot break. Their rules is cannot break. They wait for a retracement. Once they enter a retracement, they enter their buy signal will trigger for a very serious buy, or they will place the buy here. To place the buy, then place their TP above that line. So that is for daily time frame. We slowly go over to the 4 hours time frame to understand what's going on the 4 hours time frame. So from the 4 hours time frame, remember in the daily time frame I saw a structure, the M structure, which is a very strong supply, very strong supply or demand. If it's facing down, we have the inverse head and shoulder pattern, the one that is facing up. Yes, like this one. This is inverse head and shoulder pattern. Let me draw it properly. This is inverse head and shoulder. This is the head, this is the shoulder, this is the neck, this is the inverse head and shoulder pattern. The other way around is this one. Is a neck area, is a head, shoulder, left shoulder, right shoulder. This is a neck. This is where we need to enter our trade, and we enter it once you reach halfway. That's where our TP is. So now we are still seeing that same head and shoulder pattern. If you look very close, we are seeing it even on the 4 hours. I'm seeing it here, and it has finished. This is the neck area. You can see this is where a lot of liquidity is lying. So if this if it finally breaks through here, then properly breaks through here, then it's change of character. Start looking forward for a sell. But if it doesn't break through this point, I've done a video already on this same chart. I've done analysis on this same chart. If it breaks here, get to this point and start retracing, just start looking forward for a buy signal, because it's going to buy very heavily, because already the chart, already this particular pair is already on what is it called, it oversold consolidation. Remember, after consolidation we usually have a very big move, very big move after consolidation. So now we have done analysis for 4 hours time frame, and if you check also this place, I'm seeing liquidity. If you check very well, that is a double bottom, that's a double touch. We have double bottom and double top. That's a double top actually. So that's a double top where two candles, the same candles, meet at the same spot, either by their wick or with their body. They meet at the same spot. Trade went here, meet here, and pull down again, came again, meet here and pull down again. It is very strong analysis. We have triple top, we have double top, we have triple top as well too. So this one is double top, and it's actually pushing below this 4 hours. It has broken above the first low. So all we are looking for, this one now is just a small this thing. If it comes over here and break, is a sell. But if it doesn't break, for instance, if it doesn't break, more than this, it comes here and then pull up again, then you start looking forward for a buy signal. As for volatility 75 index. So from the 4 hours time frame, we slowly come down to, you can come down to the 1 hour if you want. 1 hour still have the same interpretation. You can see we still have the same points. If it breaks below this, then it's change of character. We should wait for a retracement before we enter a sell. But if it doesn't break below it, it comes down to this point. Should wait for another retracement, a few retracements, then when I enter a sell, a buy. So that's 1 hour is still respecting the same thing, and it also has the same liquidity. So we'll go over to 15 minutes, and boom, you're already seeing the same structure M on a small time frame. So now this one now confirms the fact where I told you that whatever is happening on the bigger time frame is the same thing that is happening on the smaller time frame, just that the bigger time frame is a macro view of the market, as a bigger picture of what the market is doing. But meanwhile, the smaller time frame is a micro view, a smaller view of what is actually going on the market. All we just need is for us to understand our levels on the higher time frame. Once you understand your levels on the higher time frame, it is very, very easy to take a trade on the smaller time frame, because the same levels that we are looking for on the higher time frame is the same levels we should be respecting on the bigger time frame, on the smaller time frame. The same levels on the higher time frame is the same level we should be respecting on the smaller time frame. Just the same thing. The smaller time frame just have more complexity. Okay, but if you understand what you're doing on the higher time frame, you can always understand what you're doing on the smaller time frame. So that is how to run a top-down analysis. It's not a rocket science. So 15 minutes is actually when we enter this trade. If you don't know how to if you don't still know how to enter trade, do well to watch the video on how to get a confirmation entry. It's on my YouTube. Check it. I'm still going to show you also in this place. Remember I said from the H4 that what we are looking at for from the D1, what we are looking at for is if it breaks lower than this, change of character again, it doesn't go higher than above this, then we should look at, and now the trace, we now look at for a sell. But if it doesn't do like that, it breaks out. If it breaks out from here and it doesn't pass this level, for instance, it doesn't break out, or it breaks out, it doesn't pass this level, you pull up from here, wait for a little bit retracement for you now enter a buy. If that same retracement pull back, it didn't go below this other one again, to just know that you should be looking out for a buy trend. So that's it. So with these ones now, you can still mark out the same levels on your 15 minutes chart and follow it up. So that's it. That is how to this is how to run a top-down analysis. All right, do well to subscribe to my YouTube channel and share my YouTube channel to every beginner in Forex. Even if you're not a beginner, you have been trading Forex, but you don't still understand some terms, do well to share my YouTube channel to do well to subscribe to my YouTube channel and share every video that is there to people that you know they will need to watch it. Like the videos, subscribe to the channel, share to any group. All right, peace out. Bye.